Hello everybody, welcome to the Technical Analysis webinar. My name is Troy. I'll be presenting for AvaTrade this evening. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you can hear me clearly and see my screen all right. Okay, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind, no one trade is guaranteed to bring profits. With each and every trade, there is risk involved. Now, the other end of that is with each and every trade, there are potential profits as well, which is why we're all here to go after those potential profits, hopefully in a smart way, with risk management that makes sense to you. And we'll go over some risk management tools, by the way, that are available in our WebTrader and AvaTrade Go app that can make your risk management a bit easier. As we go over the trading strategy concepts and ideas, keep in mind that it's not to be taken as financial advisement, but is coming from an educational perspective. Real quick, what is technical analysis for anyone who might be new to things that's attending the webinar? Basically, technical analysis is looking back at the charts, the price charts of the instrument that you might be interested in trading on. And usually it's a candlestick chart is the type of chart we're looking at. And we're looking for patterns, maybe repetitive movements, breakthrough movements, something that in the past might clue you in as to what might happen in the future. And so while past patterns and movements are no guarantee of future patterns and movements, it certainly can be helpful to analyze the past movements and the price levels to get an idea of where you might prefer to enter into a trade and exit a trade, in combination with, of course, your understanding of the current fundamental news situation as well, which we'll go over a bit today, by the way, in combination with our technical analysis. So we'll be on the live chart soon, looking for some potential opportunities that you could be interested in. Now, we tend to do manual methods of technical analysis in my webinars, meaning we're drawing our own lines, we're finding our own price levels, we're reading the candlesticks ourselves. And the purpose of that in the webinar is so that you can actually understand the price levels and the ideas that are going into the strategies rather than relying on an indicator that just tells you to buy or sell at certain times, and you might blindly follow it without really understanding why it's telling you to buy or sell. So I'm not saying you shouldn't use the RSI indicator or the stochastic indicator or Bollinger Bands or any number of indicators that are out there. They certainly are helpful to help you identify when maybe a trend is likely to change direction, etc. But combining that with your own knowledge of how to read the candles, I think is important. And so that's kind of the focus that we have in the webinars, is helping you understand what exactly are those indicators looking at and reading to know when maybe it's time to buy or sell. And pretty much they're all doing the same thing, looking back at the history, the historical movements of the candles, and based on some program that's in the indicator telling you when the movement is overbought or oversold, when you might want to buy or sell. And actually the manual methods are smarter to learn to do yourself, because then you can selectively choose those signals, those locations that you think it's good to buy or sell, but only in the direction that the fundamental news also tells you maybe you should be trading. If you have any questions, any input that you want to give as we go along, please do so in the chat box. Now, real quick, I know it's a technical analysis webinar, but let's take a look at what the headlines are today. Which way is the wind blowing today? And it's pretty clear what's been happening today. Wall Street surges in broad rally as oil prices slide. And they say Fed in focus. They're talking about the FOMC committee in the US. There's a meeting this week. Tomorrow they're going to make a decision on will there be a rate hike? How much will it be? What's the monetary policy moving forward in the US, etc. And Wall Street seems a bit excited today about that. Probably because if you combine the situation with the war that's going on, and then the likelihood is maybe the US won't have a large increase in interest rate. Maybe they're not going to increase the interest rate as rapidly or as many times this year as they were planning because of the situation with the war and the high oil prices. And so maybe Wall Street, the surge up today is in anticipation that maybe there'll only be a small rate hike coming and maybe a little bit more dovish policy coming because of what's going on with the war in Ukraine and also with the high oil prices. So in general, if you're wondering, when nations raise interest rates, it's especially in an attempt to stave off hyperinflation, like has been going on. Inflation has been very high. Wall Street tends not to like higher interest rates. They like low interest rates. And I say Wall Street, but I mean markets all around the world like low interest rates because it's cheaper to borrow money and to grow your business if interest rates are low. And so if there's a fear that interest rates were going to be raised rapidly to try and slow down the inflation that's been going on, Wall Street wasn't liking that. And there was a sell-off on Wall Street over the past weeks and on markets around the world in the European Union, UK, Australia, etc. But now the anticipation is maybe the monetary policy will be a bit more dovish tomorrow out of the US, meaning not so bullish on raising interest rates so quickly. And Wall Street and other markets around the world are kind of liking that right now. So we see the markets are all green today. And the only thing red is volatility, meaning volatility is down, which is amazing when there's a war going on like there is. But that's the situation. And so oil dropped off too. Part of why oil would drop is because there's some optimism that maybe there's going to be some kind of peace agreement between Russia and Ukraine to stop the fighting that's been going on. There's some hope that maybe there's going to be a compromise from Ukraine saying maybe they'll agree not to join NATO, which really is one of the large things Russia wanted in the first place, and maybe a compromise that they are going to join the EU, have official membership, that they feel maybe that gives them some stability and safety, but maybe agree not to join NATO. Who knows? The past talks really went nowhere. Hopefully, there is something to the talks that are going now. Now there's some optimism about that right now, and that's been helping the markets and helping oil prices maybe come back down. The fear about the Ukraine-Russia war is, Russia supplies a lot of oil and natural gas to the world, and if that supply chain was disrupted, then there's fears that lower supply drives price up, and that's what's been driving oil to recent highs. So any anticipation that maybe the war could stop and there won't be this supply chain disruption moving forward, that's why oil prices then have pulled back down a bit today. Now, as we look at some of the economic announcements, we see, I want to point out two things. One is out of the European Union, if we see specifically out of Germany, economic sentiment, look how that flipped. It went from over 50%, which is like a positive situation, to an expectation of dropping to 10, and it dropped actually into the negative. So economic sentiment in Germany and probably really across the European Union, we can understand why economic sentiment would be down with the fear about oil and energy supply disruption in general, with the Ukraine-Russia situation and fears that NATO could get pulled into a war. And so economic sentiment, it makes sense that it flipped potentially here, okay? It did flip, not potentially, it flipped, but potentially it could be related to this war that's going on. Now, another thing I want to point out is out of the US, while the purchasing price index, which is a measure of inflation, was a little bit lower than expected month over month. It increased less by a small fraction, went up 0.8% instead of 0.9%. You might say, well, that's positive. But still the year over year inflation on the purchasing price index, 10%, just like the last number that came in. So 10% inflation still in the US on the purchasing price index. If the purchasing price index is up 10%, well, then what's that tell you about it's coming for retail prices, right? And so the producer price index. Let's take a look. If you click on it, it tells you, I said purchasing price index, producer price index. If the producer prices are up 10% year over year, what's that do to retail prices eventually? They're going to pass the cost. The producers will pass the cost on. So still, that's not a good situation. A lot of hyperinflation. So that leads us in then to tomorrow. If we look on the economic calendar, what's happening tomorrow? We've got retail sales coming in, all kinds of announcements out of Canada as well, CPI numbers, which is another measure of inflation. We've got crude oil inventories, and specifically what the focus is, the FOMC economic projections, FOMC statement, and the federal interest rate decision. The expectation is that it'll be raised from 0.25% to 0.5%, meaning the interest rate will be raised by 0.25%, going up from 0.25 to 0.5. That's the expectation. And so we'll see what happens tomorrow. I think more what investors will be looking at tomorrow with this is the statement. It's expected it'll go up 0.25%, which, hey, there was some expectation before this war that it might go up 0.5%. Rather than just 0.25%. So this is the excitement maybe we're seeing on the markets, that it's going to be a small rate increase in the US, and the statement, maybe they're expecting, might be a little more dovish now, that they're going to say, well, we're going to maybe hold back on whether we'll increase it so fast right now because of the war situation. And so that's playing into some of this optimism today, with investors saying, well, maybe the rates won't go up so fast. And then also the optimism about maybe there could be a deal between Ukraine and Russia to get this war ended, hopefully. So two driving stories for optimism, but a lot of economic data coming in tomorrow, and still we see high inflation numbers out there. So European leaders visit Kyiv, which is brave of them. There's, after all, is a lot going on there, a lot of risk involved with taking a train into the capital city of Ukraine. So there are some leaders that are doing that from the European Union that are headed into Kyiv and will meet with Zelensky to talk about maybe a compromise. And I think it makes sense that that could involve Ukraine becoming an EU member, and at the same time, maybe giving up on the demand for joining NATO. And that's something that maybe both sides could like, and maybe there could be some progress. And we can only hope that that's the case. And hopefully they all stay safe on that train. Even by accident, it could catch a shelling or something, and that wouldn't be a good situation as well. Okay, so if we take a look at the app, and I'm going to expand that on my screen, I would ask everybody to take a look, download the app, take a look at it, use it yourself if you haven't done it already. You can trade on your MT4 accounts, your MT5 accounts directly from here. You can switch between any accounts you have with us to trade on, okay, any MT4 and MT5 accounts. So what I want to show you, since it's a technical analysis webinar, and we understand the fundamentals now, some optimism on the markets, but also some concern about, will these negotiations go anywhere? And also, there's still high inflation out there and a lot of data coming in tomorrow economically. So we could probably look at the chart soon, and we'll see that there's probably some pullbacks from all that upward momentum today. Maybe some price points that you might like on the pullbacks. And we'll look and see technically if that makes sense to make some moves on some of these pullbacks that are likely occurring right now on the major indices or on some of the currency pairings, on gold, oil, etc. Type OK if you're still hearing me clearly. I have someone saying the audio's gone. I'm assuming it's just the one person. Okay, thank you. It's enough responses. Tosin, it is just you. Okay, I let Tosin know what's going on. All right, so let's click on this tab down here, these three lines. That brings up a menu with some advanced features. We won't look at the market buzz. That's fundamental news on stocks. You can pull up all kinds of articles up to the minute coming in from all over the internet. on all of the stocks that we offer. So Market Buzz is great for fundamental news on stocks. If you're into trading stocks, it saves you a lot of time to find what the latest news is coming in on different stocks that we offer. I would recommend MT5 for the stocks. If you're on MT4, you can add an MT5 from your client area. There are a lot more stocks available on the MT5. But if the stocks you like are on the MT4, you can trade them from there as well. Analyst views and featured ideas have signals coming in for free. Technical analysis done for you. So let's look at one of those. I'll click on the analyst views. And we see here are the signals. Intraday rebound, USD to go up against the Singapore dollar. Okay, so the USD weakened a little with the optimism today. When the fear goes down lately, the USD has been weakening. And when the fear is up, the USD has been strengthening. So since today, the fear kind of took a break, volatility was down, the markets climbed up in terms of the indices and stocks, well, then it makes sense that the US dollar pulled down. And now the question is, will there be a rebound back up? That's what the signal's saying. Okay, so it makes sense fundamentally. That's why you do the fundamental review before you check the technical signals coming in, right? So that you have a preference of what signals you trust. And so this makes sense to me, that the USD might be bouncing back up now against the Singapore dollar if some fear is hitting, if there's fear hitting the markets. We see New Zealand dollar expected to strengthen intraday against the US dollar, against the yen, US dollar up against the Japanese yen here. And so you've got signals on both currency pairings, the currency index, and also on cryptocurrencies if those are available in your area. Okay, so GBP USD expected to climb, etc. All right, so let's just analyze one of these signals, and let's say the pound is expected to climb against the USD. So let's look at it. US dollar's been weakening today, we know that, and the pound was expected to climb to these price points up here. And so you see the resistance level is where they recommend in the preferred signal. It says our preference, long on GBP USD. And the support, they say, is down here on the blue line. It says look for support at 131.16. So the support is the blue line in the signal. If this move went and broke the support, they say that's it. You should have your stop loss down here, and then they say sell. If it breaks the support level down here, you see technically it's a support level. Support here, it went back up. Support went back up. Here, support went back up. So if it did come down, let's say you bought on this, there's a signal saying the preference is to buy and take profit either here or here at the resistance levels, then if it went the wrong way and broke the support, they say then you should sell. So you can have a pending order below this blue line to sell and do a market buy if the price is still in this area. If it already went up to the take profit suggestions, well, then you might be looking to trade on a potential pullback. Okay, but that's the way you read these signals. The preferred direction is given with the take profit price suggestions, and then you have the alternative scenario, says the downside is if it breaks below that support level, then to sell with take profits at those lower support levels down here. Okay, so what we could do is analyze the signal. Let's go and see what happened on the GBP USD today. And instead of doing it on the app, which is perfectly fine, you can analyze the charts here. Let's go ahead and look at some more of the features, but on the web trader. And you'll see that the web trader has the same features available as the app. Okay, and I'll show you some more of the features because we didn't look at all the features on the app there. So if I log in here from the main website, then I'm in this platform, which is our web trader. And so from the app and the web trader, you can trade on any MT4, MT5 account that you have with us. And you can switch between the accounts simply. Click the tab here, and here's all of your accounts. Demo accounts, live accounts, etc. Now I know my account says real, but this is a demo account. It's a fake real account. For the demo, for the webinars, I have to use a practice account. And so I'm just making sure you understand that. Now, what we're looking at then, if we want to look at that GBP USD, I'll bring that up. And let's see on the chart before we pick buy or sell, what's the chart look like? Okay, and so we'll get off the small candles and look at maybe 1 hour candles. And here's what we see. So the pound did climb today. It went up near those take profit marks, the resistance level, and look how it reversed right off that resistance level. Okay, so now you'd be looking and saying GBP USD, let's look at a bigger picture, maybe 2 hour candles. And looking at the technical analysis from like an inside out view, meaning I looked at the smaller candles, now we're looking at the larger candles, you get the bigger picture view. This is still a downtrend in the bigger picture, right? We can see down, 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 down. Every time it came to a high point, down, came to a high point, down, came to a high point, down. And today it came to a high point, down. And that's a sign that that fear is still there. Even though there was optimism today, here goes the USD strengthening again, maybe some of that fear coming back, and you see the pound dropping. So this easily could have been a sell position. It's like a staircase going down. You see resistance level here. It went up, tested the resistance, dropped. It formed a new resistance here, dropped. Resistance, drop, resistance, drop. Then it formed new resistance here, dropped. Tried to come back up, dropped. Each time it tries to come back up, it drops. And so again today, it tried to come back up and drop down. So that held true. And you easily could have drawn a resistance level here. This was the old support, 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 up. And then once it broke below the support level here, we see that that acted as resistance. The same spot where the old support was here, once it broke below that price level, that acted as resistance and resistance again. So that signal looked good. It went up near the price points they were talking about, and look at it pull back down now. Now, that optimism was still there. The markets are still green, right? So maybe you could look and see, maybe this is an opportunistic pullback. Remember, I said at the beginning, there are some pullbacks that have occurred. And so look how high this got today, way up here with the top of this wick up at 130.87. Now we're down at 130.28. That's a good 60 plus pip drop. Okay, so what we're looking at is if you are still bullish on Great Britain pound going back up against the USD today, maybe there's some good news that trickles out with those negotiations. We've got European Union prime ministers on a train going into Kyiv. Maybe something positive comes out of that, or at least some hope, further hope. So you could take a chance here looking at the 2 hour candles and say, let's look at 1 hour. And if we draw a new line of potential support, you could just look at today's low right here. Okay, the low that it hit earlier here. Back 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 and 10 hours ago, it was hitting this price. And it's not the low of the day, but it's a support level that was hit here. And then if we go to the larger candles, that 2 hour look, and we're going to have to go to 4 hours. Let's go to 1 day. And 1 week. And I'll explain to you why I'm doing that in a second. There we are. So I'm looking for the next support level down. So if it breaks today's low, the next support level on the 1 week candles is down here at 128.58, way down. Okay. So we go back and we look at 5 minute candles. This is a downtrend headed towards a support level that was hit today down around 130. Okay, this is the low down here on 130. And so what you could do if you're bullish on this, you can draw a small risk support level here on the 5 minute candles. This was resistance earlier today. It broke above and became support right here. So if indeed there's positive momentum today, then maybe it shouldn't break this support level. And so it wouldn't take much risk to put your stop loss below this support level. You could stretch it and say, I'll put it below this support level down here. Support, 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 and see if it bounces. Now, I don't tend to like strategies that trade on a reversal before you see the reversal. What I mean is this is still a downtrend. The low points are still getting lower on the 5-minute candles. So you could buy on this and just hope it reverses, or you could do a pending order, execute when price hits, and say, if I'm going to buy when it's still downtrending, maybe I want a better price anyways, closer to the more major support level. And that's up to each individual. So if we're looking, here's the first support level, and here's the second one down here. And so perhaps you do a pending order and you say, my entry price will be the first support level, which is at 130.20. So if that's the price you want, as an example, 130.20, and then my stop loss will be below the second support level, which is this one here. Support, 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 and back up. So 129.95 maybe for the stop loss, which is just below this second support line that I drew. 129.95. And the take profit could be back up near today's high without having to break the high. So 130.75 would be before the top of this wick and wouldn't have to break this resistance up here that it hit not that long ago. So take profit 130.75. Stop loss, I'll have to reprogram that. We had it down at 129.95. Okay, so potential profit greater than risk, 47.40 compared to 37.60 if it hits our entry price. Then you adjust your lot size. This is the risk management stuff I was telling you about. Adjust your lot size until you see the possible loss being what you want, what you're willing to risk. So I'll just make up a number. Let's say I'm willing to risk 250 per trade. If that's what I decide I'm willing to risk, maybe my balance is 25,000 and I want to risk 1% per trade. So 250 would be 1% as an example. Whatever the case may be for your balance and the amount you want to risk, this calculates it for you as you adjust the trade size. So if I do 0.25, I see I'm risking 80. So I know, okay, if I want to risk 250, then I'll change to a larger trade. 0.9. I'm risking 286. So it's a little large. I said 250, right? So 0.8. That's almost exactly what I'm looking for, 250, 360. So maybe I decide, okay, that's close enough. I wanted to risk about 250 on the move. And so now it's calculated it for me in the order window before I prepare the order or place a trade. And so if I like the setup, my potential profit 400, approximately, my risk about 250, a little less, then I say, okay, I'll set that in motion. And I took a live trade with that setup. Now, I also can do a pending order, which really could make sense here. So let me go back. Let's do the GBP again. Now, how do you do a pending order? That was a market move, but we were talking about doing a pending order. And so you would want to say execute when price hits. Let me expand the chart again. And we were looking at a price point down at, let's go to the 2-hour candles, down at that support level, which was just down a bit here. So if I want my pending order to open at this price, 130, let's say 20, 130.20, execute when price hits, 130.20. Now I can say take profit up at my 130.75 area that we looked at before. And you'll see the potential profit to risk is a little better when you do the pending order from a price maybe you prefer better. There's no guarantee it'll reach it, but stop loss then, we'll use the same stop loss, 129.95, below this second support level that we were talking about. So now we're waiting to enter on this price with a pending order. Execute when price hits 130.20. And stop loss below the second one. And you'll see the potential profit to risk ratio was better with the pending order, and we could have played with the trade size just like we did the other one. And let's do that. Here, I'm going to cancel this order. And let's do that pending order again. I want to show you the benefit in terms of potential profit. Execute when price hits. Apologize, I should have done that with the first run through. Let's expand the chart. Go back to 130.20. Execute when price hits. Take profit back up at 130.75. That's up here at the resistance. Stop loss down at our 129.95. Okay, now we see the ratio is better than 2 to 1, and that's what I wanted to point out. That's why I deleted the order and redid it. Possible profit 55, possible loss 25. Now, if I'm wanting to risk that 250, I can do one full lot. One full lot risks exactly 250. If that's the amount I'm wanting to risk, and my potential profit now is more than double. Okay. And so now I can say buy, and that's not a market move, that's a pending order. So now I have my market move, which I didn't think was going to reverse. Remember, I said I don't like trading against the downtrend that hasn't reversed yet. And you see, it started out the wrong direction. And perhaps, and I'll just go ahead and close the market move. Take a small loss because the pending order gives you a better price point. And sometimes it's hard to trade against a trend that hasn't reversed yet. And I want to demonstrate that the market move compared to the pending order, when you're trading against a trend that hasn't reversed, you see it's got momentum in the wrong direction. The pending order closer to the support level can get you a better price point. You don't have to risk as much to the same stop loss price, and perhaps that momentum will start to slow as it gets near that support level. And that's the technical analysis aspect of things. And how does that tie into the fundamentals we talked about? There's been lower fear today. And so perhaps the support levels will hold on the GBP USD because the USD tends to strengthen when there's high fear. And today the fear is not so high. Okay. Leonard, there's no trailing stop on the web trader. Good question. Okay, so if there are any requests for other instruments, please, you can ask, you can request. Let's look at the US 500 and let me expand that chart. And what we're looking at here in the US 500 is there was an uptrend and a pullback, and that's what we talked about at the beginning. Here's the uptrend on the 15-minute candles today. The fear has been down, and here's the pullback. And so that could be a price point you might be interested in trading if you think the optimism will continue. Now, it's possible news could come out that the talks between Ukraine and Russia failed and that there's escalation coming in the war, and down could go the market again. And if you feel that that's the situation, then you would short this right now. You would take a sell and put your stop loss above this resistance up here maybe. Okay, so it depends which way you read the fundamentals. But since this is a technical analysis webinar, we'll trade on the technicals, since the news is kind of neutral today without a lot of high fear. And so you can start to look at the smaller candles 5-minute, 15-minute. Draw your little support and resistance levels. Here's a support level, support, up, resistance, down, support, up, resistance, down. It hits this price back up, and here it is bouncing again. So you could have bought off this little support level, and your resistance level is up here. Okay, resistance down, resistance down, resistance down. So, and here it goes. We see it bouncing up. That's a perfect example of trading on this ranging movement that's occurring in the direction that you think the fundamental news would call for. So this is a classic example of trusting the support level because fear is low today. And there's the bounce right up off that support level. We missed it by a little bit. And we looked at it, 5-10 minutes ago, it was in a great spot. Price-wise to buy off of this support level, and here it's climbing. Okay, so that's a good example of what to look for in a support level with a preferred direction based on the fundamentals. And there's a nice bounce almost halfway up towards the resistance, maybe a spot where you'd be looking to scalp profits as it gets closer to this resistance or this resistance up here on the chart. Okay, there's a request for GBP JPY. Let's have a look at it. If the pound is expected to climb against the USD because fear was low today, then maybe you expect the pound to climb against the safe haven yen as well, right? So let's take a look. Let's see where the price is. So we see, indeed, these are the 5-minute candles. Up went the pound today. Up, 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 up against the yen. Here's the pullback. So again, you'd be looking, if you still think the pound should climb, you're looking for a support level on these small candles, like right here. The last time this pulled back, it bounced off this line and went up to here. So here it is back down, nearing this support level, and perhaps you get another bounce. So if you're a scalper, you're looking to maybe wait and see if it respects this support level, if it starts to bounce off of the support and starts a small uptrend, and if so, you might look to buy and put your stop loss below the support. That's the technical strategy of trusting maybe the support levels and backing yourself up with a stop loss below that support level for very limited risk and larger potential profit if it pushes back up. We might take a bigger look at this on the 15-minute candles. And again, with the 15-minute candles, we see here's that big uptrend today. Here's the pullback. And the question is, do you trust these support levels? And if so, you can buy off the support with your stop loss below. If you feel those negotiations are going to go bad today, then you're thinking the opposite. You're saying, okay, it's a nice high price point. Look at all this climbing to sell from, because maybe you think fear will hit the market again, the negotiations will go bad, and that the yen then would strengthen as a safe haven currency. And maybe you think you should sell here with your stop loss then above today's high. And again, in one circumstance, you could be buying on the pound, and the other you could be selling to diversify a bit. And if one of them wins, because you're doing setups maybe where you're risking less than the potential profit, then if you win just one out of those two, you could be an overall profit. And so in trading, you don't necessarily have to be right. You don't have to guess the market. Many times you just have to be smart. So in one instance, maybe you've got an order to buy or a market move, and in the other instance, you could be going in the opposite direction. Okay, so this isn't an easy call in terms of the fundamentals because of what's going on with Ukraine and Russia. So you have to maybe go back on the technicals and say what looks smarter to do, and you start looking at larger candles. And you say, wow, that was a big climb from down here from last week on Wednesday. Look at this climb on the 4-hour candles. Look how much it went up, right? And so if I'm going to do a sell on this in the bigger picture, not a 5-minute scalp, but a sell in the bigger picture that I think fear will come back with everything that's going on in the world right now. I think the yen could strengthen as a safe haven currency against the pound. Then the bigger picture could be a sell here on the larger candles. You could be scalping on a buy on the bounce, on the short-term happiness that's on the market, but in the bigger picture on the larger candles, be selling, just as an example. So if I'm going to do a market sell here, my stop loss might be up above the high today, which would only have to be right about here, this line. Today's high is the top of this wick. So to be above that is 154.80 would be above today's high for my stop loss. So 154.80. And my take profit, if I think it's a longer term move, I could be looking for this huge climb to retrace back down to maybe this support level down here, which is an old support, and back up, support, back up. It did break below it here and then went back above and found support again. So this is a compromise, not going all the way to the low point down here, about the halfway mark, which is an old support level here. So that would be 152.95, for example, as a take profit. So on a sell, 152.95 for a potential take profit. And I accidentally clicked my stop loss out. The stop loss, remember, was above today's high, which was right up here, the top of this, 153.55 would work if we're looking at 4-hour candles. That would get us above these wicks here, 153.55. And apologies, the stop loss came out, or the take profit got erased. Let me just re-enter that. And so if I'm drawing a take profit down in this support level down here, we're talking 152.95. So stop loss risk 51.29, which is just above today's high. That's this line. And the take profit down at the first support level here that we see on the 4-hour candles, which is a potential profit of about double what I'm risking. Possible profit, possible loss. Okay. Now, if I'm willing to risk X amount, now I can adjust my trade size to the amount I'm willing to risk. 0.5, for example, risks about 250, if that's what I was shooting for. And my potential profit over 500. So about 2 to 1 on that sell, and I set it in motion. I could add AvaProtect, by the way, as well. I can pay for protection by the hour, by the day, etc. Okay. Just got to get my stop loss price adjusted here. Apologies. Let me adjust the candles here, get a little better view. And I need to be above, I'm sorry, 154, 1.5. So let's go 154.2 on the stop loss. Or 154.30. Apologies, one moment. Okay, and so we get the take profit programmed, your stop loss programmed above the high at the price that makes sense for you, and that could be above this resistance up here or this resistance here. Okay, I don't want to waste any more time on this GBP JPY chart. I apologize, I had a little issue there getting the take profit and stop loss program properly. Apologies. Okay, any requests on another instrument besides GBP JPY, which it's pretty obvious those price levels there with support and resistance depending on the direction you want to go. Any requests on instruments? I see gold popping up. Let's take a look at gold. No, not Bitcoin gold. Apologies. And now we have gold. Okay, so we see gold has pulled down a bit on the 2-hour candles from the all-time high that it hit last week. And so we see it broke support level after support level as it pulled down. And if you feel with that 10% inflation, for example, that showed in the US still today on that announcement, if you feel that that high inflation, which is one of the #1 reasons people buy gold, is as an inflationary safe haven, if you think that could drive gold back up, this might be a price point that looks opportunistic to you. We see gold found a little bit of support and bounced a little here, still trending down, but potentially could be looking for support down lower. So the technicals, if we go maybe 4-hour candles, we can see, if I pull one of these lines down, there's a support level here at about 1884. So resistance, support, 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 and up it went. And then you see it pulling down. It hasn't reached this support yet at 1884, but it's nearing 1900. It's at 1920 now. So you could do a pending order to buy perhaps from just above this support. If gold gets down, say to 1890 or so, that could be a spot maybe you're interested in buying from if you feel that the inflation fears would keep it from breaking much lower than that. This is a support level there. Or if you say, listen, I think gold will go back up and it may or may not reach this support level and you're afraid you'll miss a rise, then you could do a market move. And you actually could do both, right? You could buy market move and have a pending order down near this support for a better entry. You also have the option to use AvaProtect. So, I could protect by the hour, by the day. Let's say I do 2 days protection and I'm willing to pay that $250 that I was mentioning, if that's the price point I have for the protection. There's a quarter of a lot, 0.15. That's about $250, the protection cost on a gold move with 15 ounces, 0.15 lot size, and we see $260 costs for the protection. So no matter what happens during the protected time period, I don't have any other risk other than maybe a small overnight interest for the 2 days. The protection protects me if gold goes flying the wrong way. And if you think there's a big reason, let's say, for gold to go up and you trust this support level, then maybe you do an AvaProtect move. Your potential profit, if gold goes even back up to, let's say, 250, which isn't even the highest point that it reached up around 270, then you could go ahead and program it at a take profit at 250. And you'll see that if I, not 250, 2050, if I program at 2050, my potential profit is 641, and on 5 ounces, or on the 15 I was talking about, potential profit's almost 2,000, and I'm only paying 260 for the protection. So maybe I like that, and I buy on gold. So now I have an AvaProtect protected move. There's gold. The shield shows that I'm protected. I have all the way until the expiry, and if you click on the little I, it gives you information. I have 43 hours and 10 minutes that I can just sit back and wait. A couple days before the protection ends. If it moves into a profit I like, I can close it early before the protection ends. If gold goes flying the wrong way, I don't care how far, when the protection ends, any negative floating gets added back to my account. And then I can let the trade keep running. Or if I got stopped out before the protection ended, then any negative from that trade would be added back. So it's a very cool risk management feature, especially during times like now, where you just don't know for sure what the fundamental news is going to bring. There's a lot of craziness in the world. So the potential's high for a big move back up on gold. We see the big pullback. The potential's high for a big move back up. But also, if that news breaks the other way, maybe gold drops further, and now we're protected for a small premium cost. Okay, So I said it before and I'll say it again. It's not about guessing the market and having to be right. It's about being smart many times when you're trading. And so these types of risk management features can help you maybe be a bit smarter. And you combine that with the technical analysis like we're looking at, and you see price levels like on gold where that support levels down there. And maybe you think with this high inflation fear that gold maybe more likely than not won't break that support level. And if that's how you felt, then making a move like this and adding the protection could pay off nicely with your risk covered for a specific time period there with the protection as well. All right, everybody, we've been going for nearly an hour. I think this is a good place to stop. Thank you for attending. And I think you'll see a lot of nice movements here through the evening. So check out the charts, set up your lines, your price levels, and go after some potential profits with your risk managed and limited based on the price points that you're seeing on the charts. All right, everybody, thank you for joining and good luck with your trading.